Hey traders, John Howell here. Hope you guys are doing well today. Today we're going to be focusing on the stock market. I'm going to be also like the S&P, the Dow, and all that sort of stuff. We had a very nice rally in the markets today. So where are we probably likely to rally to? If this is some sort of dead cat bounce, where are we actually likely to rally to before it flattens out? I'll share with you exactly where I think where we're likely to rally to. And also I'll be sharing something with you on the transports, because I think we may be getting some sort of a false breakout here on the transports, which means we could be getting ready for a bullish move. I'll share that with you and what I'm seeing through there. Also talk about silver and gold, what's going on there. Also want to talk about US dollar. That weekly chart looks like it may be topping out there, and if we get a little bit more downside, we could be getting ready for some sort of a really big pullback in the US dollar. And also, very lastly, I want to share with you a powerful triangle pattern that when it forms, you can see when it forms, you'll be able to see once it breaks out, you'll be able to see where it's likely to go and so on and so forth. So I'll share that with you just to help you guys out. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it today. Before I start, guys, if you are looking to learn how to trade the market successfully, if you look at if you're losing a lot of money right now and you don't know the reason why, then join my web class with the very first link below, because I'm going to share with you exactly how I went from $250,000 net in my first 2 years to now getting ahead in the markets. And then after I teach you the number one thing that switched me from losing money to making money, they're going to share with you my simple strategy that gets over 90% success rate. In fact, with my trading system, it's very hard to find a trade that doesn't make a profit, that meets all the rules. And then I'm going to share with you an awesome scanning piece of software that I use that allows me to trade up to half an hour, 1 hour per day maximum, to get all my trading done, to find these amazing trades for me. You're going to absolutely love this. If you are struggling with your trading right now, join my web class today and you'll be able to see all the details. So let's have a look here. Let's have a closer look here on the Dow Jones. Firstly, Dow Jones, Russell. So the Dow Jones was up 4.5%. The S&P 500 was up a bit over 3%. And the Nasdaq as well too, bit over 3% as well too. So by what I said at the start of the video, right, is I'm going to share with you exactly where I think we're likely to rally to. And here is the thing. One thing you'll notice here, okay, you notice my blue moving average here is the 52 moving average. But if I squeeze my chart up over time, what do you see happens with this moving average? What happens, right? When we get too far away from it, either up or down, guess what happens? It's like a bit of a magnet, right? We go up and then we have a bit of a pullback to it. We go up, we have a bit of a pullback to it. And if we get a very sharp pullback, very vertical pullback, guess what happens? A lot of the times we actually get a pullback to it, right? And if not, we continue up. So on a short-term basis here, when it comes to, now I'm not saying exactly today, guys, as I was saying in yesterday's video, that I think overall we're likely to continue up from here. But you know, even if we do get a bit of a pullback here on a short-term basis, maybe the next week or two, and that still could be a possibility, I do see that the Dow Jones is likely to rally to at least the 52 moving average, this moving average here. If we are going to peter out, if we are going to get some sort of a lower high action here, if we're going to get some sort of topping out action here, then we would want to see something like this. And actually, let me just bring this up here. We would want to see something like this. What will happen is we will see that this market comes up, and then probably the moving average is probably going to catch up from here. And then we're probably likely to start to see a move down from there. So that's if that starts to happen, then we may be getting ready for a lot more downside. But it's not always black and white, right? And what I mean by that is that if we get a very strong rally up through here, but then we get a very, 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 very weak pullback, but we're still pulling back, that tells me we're likely to go back to the upside. So there's what I call the strengthened moves. So in a nutshell, guys, I see this thing rallying up until the 52 catches up, and then that's what we're calling price and time now balancing out. Whenever we get a very sharp drop like this here, the market needs to counteract it, all right? We need to start to balance it out. So we've got a very, very, very sharp drop through here. I see this thing rallying up to around the 52 moving average, or it might not do much for a week or two and let the 52 moving average catch up. Either way, that's where I think is going to happen. We've got a very, very, very strong close on the Dow Jones today. You can see here that we've now been changing the tune. And if we have a look at the bars, we've had a lower high. There's a lower high compared to the previous stars. Lower high. This is a higher high, and almost pretty much the same high through there. So you can see now we're making now higher lows on the bars, which means we're starting to shift this movement here from down to up, and you can see that through there, right? So I'm not calling for a massive rally out of this here. I do believe overall we're likely to see all-time new highs come this year, and I'm set up for that. But even if once again, guys, even if we do get a bit of a sideways movement, but that's what I'm seeing through there. Same for the S&P 500, right? We're pretty far away from that there. And the question is like, if we do get a rally up towards the 52, and that's what happens, then we're probably going to come and close this massive gap through. This is a massive gap that will be filled. Okay, it will be filled. It will not be left open. For you guys that think we're not going to rally up here to fill this gap, it's going to happen. Now, when is the question, right? Because if we get a bit of a pullback through here, then we're going through a bit of a pullback, right? But eventually we will find a bit of a floor and then rally up. Who knows? We may be going through a V-bottom right now, just exactly like we did in December. We got a very sharp drop in the markets, and now we're getting a nice movement back up towards where we are right now. Very sharp drop in the markets, and you can see how it came all the way down to this support level, double support levels, and now we're just rallying up and out of this level through here. And so that's what I see through there, guys. And once again, even on the Dow Jones, we've got this big gap through here, right? This gap all through here. That will be filled, guys. And so I'm thinking now if we do continue moving up from here, we're probably likely to really overshoot the 52 and probably come and close that gap. Now, if that happens, we're probably going to continue. We're probably going to make a higher low and then break past previous highs if we do get that. What you want to see is that if we are going to roll over through here and come back down, you want to start to see the sellers sort of come back in really quickly. But for now, as I'm seeing it, right, we had a drop down and now we're having a big drop up through here, a big rally up through here. So we're getting a nice bounce through these actual markets. So that's where I see, guys. And once again, even on the S&P 500, you can see that if we do get too far away from it, we eventually come back to it, right? And you can see how that happens through time and time and time again. This is the way the markets work. We have this price and time. And one of the things that was making me really, really confident in calling a reversal, and it was coming, and I even did a video on this day right here saying get ready for the reversal, is because of that one technique that I just shared with you, right? Whenever we get too far away too quickly, guess what happens? We get a bit of a snapback. And this was actually a very sharp drop. Look what happened here. You got a very sharp drop, and then we had a snapback towards the 52. Yes, it continued up from there, but at least on a short-term basis, we see this bit of a snapback probably come back towards the 52 to balance out that price and time. Price simply means we had a very big pullback, and the market's like an elastic band, right? We've stretched here, now we're just snapping back, and then we're probably going to do what it's going to do from there, which I truly believe is still, and I've been this pullback in. That's why these last few weeks I've been saying this drop is a great opportunity to buy. By the end of this year, we're going to be making by the end of this year, guys, I see this well above all-time new highs and continuing on from there. And I actually have my money where my mouth is when it comes to that, because I'm positioned already for this. And my options are doing fantastic right now already from just this last couple of days. So, but that's short term. Anything can happen tomorrow. And on the transports, I want to share something with you, as I promised you. Firstly, we have a very, very, very long-term trend line. Look at this very long-term trend line. Look at this here. Bounce. You can see where all my arrows are, and then you can see what actually happened just recently. Look where it actually found support recently. Ain't that pretty cool? So we have a bit of a long-term weekly trend line coming up. But if I go to my daily chart through here, you'll be able to start to see that we had a major level of support through here. Okay, and then we've dropped down, and we're at this level of this other level, this weekly level here of support on the transports. And now we've got this support around the 170, which is that long-term weekly. And we had this resistance, which is this support. We actually did test it as resistance through here. As you can see on this candle through here, we came up and we tested it as resistance. So that tells me that by looking at this here, if we continue to hold through here and then we get some form of a break up and out, so we start to get a nice close back above this level through here, this whole thing here is now one big false breakout. If you watched yesterday's video, right, I talked about how I saw how that happened with the GDX as well too, and some other stocks and so on and so forth, right? You can see how this broke down. So if we do get a rally back up and above this support level now, this that level now is probably likely to, even if it does have a bit of a pullback, we're probably likely to find a bit of support. Okay, and then probably what's likely to happen is then we're likely to start to see this thing start to do something like this, come back up and close this gap here, even on the transports from there. Once again, coming back towards the 52, and we have that resistance through there, but the gap is probably likely to be closed as well too. So if you can see that through there, guys, you can see that we've had a major level of support. We've had a breakdown. This long-term weekly trend line is coming into play now for holding it. So if we break back up, get ready for a strong rally in the transports. It's so interesting because the transports has obviously been affected big time, right, by obviously what's been happening with the coronavirus. But the charts are telling me that things are about to pick back. Now, not yet, right? But if we get a break above there, the charts are telling me that things are picking back up again in the whole transports world. Makes sense? So we did have a level of support through here, as you can see. Once we actually broke that level of support, we ran to the next support level, came down through here right now, and that's what we're seeing through there right now when it comes to that. So that's what I'm seeing through there, guys, when it comes to the stock market. Let's go have a look at yeah, that's right. The gold chart through here. Gold chart, once again, we're coming back down through here. You can see how, once again, guys, if we get too far away from the 52, as you can see, we had a bit of a snapback. It came right back down towards the 52 moving average, and now we're getting a bit of a short-term bounce. We do have this level here going on right now. So we have this sort of double whammy of support level through here, and we are getting a bit of a bounce, and we're not really doing much today through here. So I'm very bullish long-term gold. And as you can see, that's what's going on through there. Moving on now through to silver. Pretty much nothing's been going on with silver right now. Once again, I wouldn't be too surprised if we got a bit of a snapback towards the 52 through here. The really interesting thing for me that I'm watching on silver is on a short-term basis anyway. Long-term, if I look where I am right now and I look forward 2 years, and then I look back 2 years. I'm very confident that over that 2 year period, we've had a very big run in silver. That's what I mean by long term, right? So is it going to happen today? Is it going to happen this month? Is it going to happen 6 months from now? We just never know. So, but what I can say on a short term basis, right, is that we have this level of support down here, and we have this level of support and resistance through here. We broke down. If we break back above this 1750, we're probably likely to continue up then up towards this 1750 level there on a short-term basis there. But if we hold here and we continue turning over, we're probably likely to drop back down. But even if that drop back down happens, I'm pretty confident that we're probably likely to see this. If this does happen, probably a drop down through here. Not really much going on, and then a break back up, and then a big move up. So either way, I'm very bullish on silver through there long term. And that's what I wanted to share with you there. Now, let's actually go have a look at the US dollar, because this is the US dollar here. You can see the US dollar is having a bit of a pullback right now. But the interesting thing that I'm seeing with the US dollar is this. Let me just bring up a blank chart with no moving average here. And let me bring up the weekly chart here. Look at this here, right? Look at this here. Firstly, notice how there's actually a very big tune change in the US dollar, right? We had this we've got this major level of support through here, but look what's happened here with US dollar, right? We had a rally up, higher high, higher low, higher high, higher low. We made a sort of sideways movement. We made a higher high. Then we came down, made an equal low. Now we're rallying up. Notice how this is the very first time that we're now creating this high, which also could be shoulder, head, and shoulder. So the neckline here is around the $26 mark. So by looking at this level through here is that if this is some form of head and shoulder formation, and we do get that, and this is, you can see how this would be the head because it came up through here. Sorry, that would be the shoulder. This would be some form of a head, and this would be some form of right shoulder through here. If this is a head and shoulder formation, as you can see from there on that chart, and we break the $26 level, then I see a run back down here. Now this is the UUP here, but I see a run back down towards the next support levels, which is probably going to be, we'll find a bit of support all the way down, but I see this thing rallying back down to at least, I would say around about that $24 level. $24 level, and also that would come into play as well too, this long-term trend line through here, just like the transports did I showed you in this video. You'll be able to see that will come into play. So these levels here, if we do get a drop down, we'll probably likely to come into play somewhere. It may be even this level here. The projection for this, if I measure from the head and project that down, is actually right there. So it's actually very, very close. So US dollar looks like it may be topping out right now. We haven't actually got that, so it's really, really interesting. Let me now go share with you guys one pretty awesome technique when it comes to the triangle pattern. And one thing I want to share with you when it comes to the triangle pattern here is this, all right? This is just, this is, and one thing you can see here, right? Now notice if I bring back my charts here, notice how you can see this here. See how it's an ascending triangle pattern, right? So this is actually quite a bullish pattern. And if I was looking at this right now, it's okay, if we do get a breakout, we're now likely to run to the $10 mark. Makes sense? Because it's a bullish pattern, and that's why we always wait for the breakout first, right? The breakout is like the confirmation where it's likely to run to. But we don't always get a break up, do we? Sometimes we get a break down. If it does break down, then where it's likely to run to? The next support level. So notice how if it breaks up, target will be the next high. If it breaks down, the target will be the next low. And so as you can see, right, that if I bring this forward, you can see how this day right here actually closed below with an increase in volume. That was telling you, and also you can see how, look at this here. Isn't it fascinating? Look at this here. I'll show you something with you. Okay. Notice how we had a low, we had a high, we had a higher low, a higher high, a higher low, a higher high, a higher low, double top, then breaking down, breaking past these previous lows. Notice how this is sort of the market's giving you some guidance on what's going on right now, right? We made a double top and it failed and then broke down past previous lows. So as you can see, so by seeing this here, my target was down through here, which was, to be exact, which is around that $7.35 level there. Or it's probably actually a bit higher than that. But around that sort of $7.40 level there. That was my target from there. And as you can see, the next day didn't do much. The next day dropped down, almost there. It's pretty much at my target now. And then we got a gap down, and that was my target, and completely trade done. As you can see, right, you can see how that works out. And that's why if you watch my videos, I'm always saying, wait for the breakout, wait for confirmation first. And that's why with my setup, and you'll be able to see the link in the description, that why the setup is important, but the confirmation breakout candle is important as well too, because it tells you a higher probability degree of where it's likely to go to. And also higher probability they're actually going to make a profit from that trade. You know what I mean? That's what we're looking for, right? So never guess, never gamble. Always wait for that over there. And I just want to share that with you. And as you can see, not much has happened. It's continuing down a lot more now. But that was, if you're looking for a short-term play, right, that's very, very similar to what we're talking about here. You can see not much happening through here. We had a lot of small candles. We had a very large breakout candle. This was the, see how this candle here, if I go back to that, notice how this was the very first large candle breaking out of this triangle pattern. Notice how all these other candles were very, very, very small. Very, very, very small. Not much of a volume going on. And then suddenly what happened? We got a very large bar breaking out and increasing volume. That's the key, right? Not much, very small candles. No one really in control. It's not really doing much. Triangle pattern. Breakdown. And then we got the increase in volume. That was telling us now we're likely to continue down. Plus also, if you looked at that weekly chart as well too, weekly chart was pretty much not doing much. So probably likely to drop down. You can see that that's what happened through there. We may even be continuing down a lot more from there. But this on a short-term basis, guys. Again, short-term trade in and out, 2 to 5 days type thing. And as you can see, that's what's going on through there. So traders, I hope you can see from the way that I view these markets, the way that I trade these markets, it's actually quite simple. And the way that I see these markets, and just be patient and be rational, and please don't listen to the news and the media right now and fear monger and all that sort of stuff, because it's definitely not going to help you. Simple, regardless of the coronavirus, regardless of what's going on there right now, once you have a very simple but powerful trading pattern, doesn't matter what's going on the economy, just like this right now, right? The setup was there based on the setup, not because of the coronavirus. People say, oh yeah, it went down because of the coronavirus. Really? Well, tell me what happened. If that's the case, then why has Netflix continued to go up then? Oh, but Netflix is different. Really? Come on now. Did you see what I'm saying there? Because all stocks are different, right? Like Netflix hasn't even dropped at all. Netflix is like, what? What coronavirus? Let's continue up, right? Where other stocks have gotten hit and so on and so forth. So the whole point here, guys, is that once you have a really, really good setup, again, join my web class. I'll share with you my setup, and you'll be able to see more details about, say that pattern that I talked about today. You can see that you can do really, really, really well no matter what the market's doing, no matter if the market's going down, no matter if the market's going up. Just have some form of a high probability setup, have good risk management per trade, and then not only good risk management, which means you're risking quite small per trade, and then have the ability to have a high win-loss ratio, and then have the ability to 2-3 times, sometimes up to 5 or 10 times profit compared to your risk. That's the way that I trade. So I trade a strategy that has a very high win-loss ratio, 90% plus. I risk very small in my account. Most of the time it's around 5% of my account. And then if the trade does plan out, like the one I shared with you today, my profit can be 200%, 300%, 400%. And sometimes I have a longer term play where I'm in it for a month or two. Those things can go up to a 500%, 1,000% and more. Makes sense? And once you start to play the game like that, even if you have a few bad trades and you take a few shit trades, you can get back on the horse pretty quickly and continue to go throughout the year and grow your account. High win-loss trading strategy, low risk on your account, high profit potential for your account. So the way you look at it, right, is like, why wouldn't you want to be in a position where you have a very high win-loss ratio, you're risking very small accounts, say 5% of your account, but the ability to do 10, 15, 20% return on your account, maybe even up to 30% if it's a really big winner every now and then, 1 out of 10 will. See what I'm saying through there? So that's exactly what trading is all about. Again, guys, join my web class. You'll be able to see all the details to that. And I hope this video helps you out, guys. Be smart about the way you're trading, and don't try to be right, and do not try to load up, because you're always going to get your head handed to you.